Let's start with the very first change. You know that composition dealer having aggregate turnover up to 1.5 crore, that is the threshold for opting for composition dealer. He was not allowed to supply goods through e-commerce operator. But now changes is being made. Composition dealer is now allowed to make intra-state supply of goods through e-commerce operator. So when I say intra-state supply of goods through e-commerce operator, then it is inherent. Sometimes looks like that this composition dealer is not benefited because we do many interstate supply, but that is how this provision all about. Can I ask quick question to all of you? Within the provision, you can always find the answer, whether it is permissible for interstate supply of goods for a composition dealer. Leave e-commerce operator, say yes and no in a chat box. So you can use yes and no in chat box. He can't do interstate supply of goods. And not allowed even for through e-commerce operator. Next question to all of you, whether supply of services through e-commerce operator is permitted. Say yes or no. We are talking about intra-state supply of goods only, not the services. So a lot of compliances need to be done. There should be enrollment number, and then composition dealer can undertake intra-state supply of goods through e-commerce operator. Having said that, now come back to the next important change. Next important change. Second proviso and third proviso of section 16 subsection 2, which is pertaining to when recipient fails to make payment to the supplier within 180 days. Then recipient need to reverse credit, right? It is known to all of us. What is the change brought in? Listen very carefully. Earlier, this provision was adding this reversal towards my output tax liability. Earlier, this reversal was added to my output tax liability along with interest. Now, this is being amended in second proviso and third proviso under section 16 subsection 2. Now, hereby, recipient buyer fails to make payment within 180 days from the date of invoice, value and tax both together, then he can reverse credit as against added to output tax liability. Along with interest, and for interest, my submission to all of you, interest is leviable only when this credit, which can be alleged as wrongly availed because of non-payment within 180 days. But not leviable, interest is not leviable unless utilized. If you have utilized the credit, then of course interest is leviable and rate of interest would be, and I want to know from you, 18% or 24%. You can write down the answer in a chat box. I can see and I can correct accordingly. 18%. From July 1, 2017, even from retrospective date. So when you're reversing credit, you need to capture this amount in table 4B2 of GSTR 3B when you're reversing credit, because then it is reclaimable. So whenever you make the payment, you can re-avail the credit. So for re-availing credit, my next question to all of you, with a time limit as per section 16, subsection 4 is applicable. Say yes and no in a chat box. Not applicable. Time limit is not applicable for re-availment. So you can show this particular amount in table 4B2 of GSTR 3B. And whenever you are re-availing this credit, you would be re-availing in table 4A5 of GSTR 3B with the simultaneous disclosure in table 4D1 of GSTR 3B. Hope this part is clear. Now here I want to clarify, which is not the part of provision change, but you must know that this recipient need not require to reverse credit for non-payment within 180 days in these following given situation. When there is RCM liability paid by recipient, Schedule 1 transaction deemed supply without consideration, no reversal. To the extent of part payment made, no reversal required, only to the portion not paid. To that extent, reversal would be required. And whenever transaction pertaining to valuation, section 15, subsection 2, clause B, FOC supply by the recipient to the supplier, in that case, this consideration part is not going to play for the reversal of credit. Or if there is force majeure clause in the contract, and because of that, recipient fails to pay, in my humble submission, need not require to reverse ITC. If there's extended credit term, let's say for 365 days, I know that there are two different schools, two different views, but I'm asking each one of you. If I decide being supplier and you as my buyer, that credit term would be 365 days. So it is crossing 180 days. Can we say recipient fails to pay? When we both agreed there would be extended credit term, 365 days. Do reversal required in this particular transaction? There are two different interpretations, but my humble submission, then we can always argue before the court of law that the recipient is not failing because it is agreed with extended credit term. But of course, litigation is going on. So this was the second change. Coming to the third change. Schedule 3 you are aware of. They are specified 8 entry, neither a supply of goods nor supply of services. Para 7 and para 8A and 8B. What is this para 7? Para 7 was merchant trading, supply of goods from a non-taxable territory, say Korea, to other non-taxable territories, say USA. You are registered in India, but you're undertaking supply of goods from Korea to US, which is not coming in India, and transaction happening from Korea to US. Para 7, merchant trading. Schedule 3 transaction, neither a supply of goods nor supply of services. Para 8A, supply of warehoused goods. So when you are importing, you have warehoused your goods in custom bonded warehouse. And when it is being supplied before any home consumption, clearance before home consumption. So sometime when it is within custom bonded warehouse, you are selling it. So this transaction is again being considered para 8A, schedule 3, neither a supply of goods nor supply of services. Para 8B is high seas sale. When goods are on high seas, it is being sold before entering in custom frontier of India. no GST leviable. And this amendment was done on 1st of February 2019. What happened this year in Finance Act 2023? We have seen that the field information, the field formation, the department at a lower level disputing the transaction prior to 1st February 2019. And they were issuing a so-called notice. And we have seen in many transactions, they have collected the tax even on these transactions, these 3 transactions. Fortunate part that para 7 and para 8A and 8B of Schedule 3 now being notified retrospectively from July 1, 2017. No GST, being neither a supply of goods nor supply of services. But another condition is being stated in this particular change. If you have paid the tax because of your wrong perception, or you just wanted to avoid department litigation, you have paid the tax. Now it is being stated it's a Schedule 3 transaction from July 1, 2017. If you have paid the taxes, can you go for refund? I'm asking you, can you go for refund? Say yes or no in a chat box. Can you go for refund? Provision is saying you can't go for refund. But in my humble submission, this tax was not leviable at all. Whether it was amended from 1st February 2019 or now it is retrospectively from July 1, 2017. Ultimately, these 3 transaction tax was not leviable. If some taxable person has paid the tax wrongly, then that will be considered without authority of law. So if this tax is being paid, which is without authority of law, is being corrected by the department, then in my humble submission, we can always demand refund of the same, because it is Article 265 clearly saying no taxes should be collected without authority of law. Please, you need to be careful about, and that is what in my humble submission. Hope this part is very, very clear. Another component pertaining to this transaction. I'm asking you question first, then I will explain the change which has been brought. These 3 transactions are out of GST, no GST leviable. But let's say there are certain common input services like rent, mobile. You can talk about certain common input services, internet, audit, many things. On your outward, you have not paid the tax because Schedule 3 transaction. Can you avail credit, common input tax credit pertaining to these 3 transactions? Say yes or no in a chat box. Possible. Say yes and no. It was possible. It was possible. I'm saying was possible. Now there is change. Explanation. Section 17, subsection 3, which talks about value of exempt supplies. Earlier, it was including only para 5 of Schedule 3, which is sale of land and building. Now they have included para 8A, which is supply of warehouse goods. Before clearance for the home consumption. So if supply of goods within custom bonded warehouse is now going to be considered as a part of exempt supplies and need to be added in the value of exempt supplies for reversal of Rule 42 and Rule 43. Input and input services 42, capital goods rule 43, only para 8A. Para 7, which is merchant trading, Korea to US and high sea sale, still out of exempt supplies, meaning thereby on these two transactions, credit would be available except para 8A. And it is effective from 1st October 2023, meaning thereby prior to 1st October 2023, department cannot demand, I'm saying cannot demand, reversal of common ITC pertaining to all Schedule 3 transaction except para 5, sale of land and building. But from 1st October 2023, they can demand reversal of common ITC on para 5 and para 8A of Schedule 3, effective from 1st October 2023. Hope I'm clear to all of you. Say yes in a chat box that this part is clear. Say yes in a chat box that this part is clear. All right, now let's move. Pertaining to corporate social responsibility. If any goods or services purchased for CSR mandated under Section 135 of Companies Act 2013, statutorily mandated, we got divergent advance ruling, some judgment in our favor, some judgment are against. Under Income Tax Act, it was disallowed, but in GST, there was dispute whether credit of GST on goods and services used for CSR would be available or not available. Section 17, subsection 5, clause FA introduced, which is prospective clause from 1st October 2023, meaning thereby now you will not get GST credit on goods or services used for CSR mandated under Section 135 of Companies Act 2013, but it is prospective one. In my humble submission, prior to 1st October 2023, department cannot demand reversal of ITC because this restriction, which is being introduced by prospective clause, cannot be applied retrospectively. That is my submission. Hope you all got it. Say yes in a chat box that it is clear to all of you. Say yes in a chat box that this part is very clear to all of you. Perfect. All right. Next. Section 23, subsection 2 is very, very important. And listen very carefully. Section 23, subsection 2. Before I start Section 23, subsection 2, let me tell you what is 23. Section 22, subsection 1, you know, threshold aggregate turnover for registration. 23, subsection 1 is saying that if you are exclusively engaged in supply of exempted goods or services, nil-rated goods or services, or non-taxable supplies, then you need not require to take registration. Exclusively engaged. An agriculturist, 23, subsection 1. You need not require to take GST registration, irrespective of any amount. Section 24 talks about compulsory registration. Like for RCM, if you're liable under RCM, you need to take compulsory registration. So 24 lists down certain transaction for which there is compulsory registration irrespective of any threshold amount. Now listen what is the change which is being brought by Finance Act 2023. It is retrospectively applicable, first of all, from July 1, 2017. Retrospectively. 23 subsection 2. notwithstanding anything contained in section 22 subsection 1 or section 24. So overriding 22 subsection 1 and overriding section 24, and saying that the specified person can be exempted from taking GST registration if they are being notified by way of notification on the recommendation of GST Council. Simple meaning that 23 subsection 2 retrospectively applicable from July 1, 2017, overriding 22 subsection 1 and 24, saying if you are a class of person who are exempted from registration by way of notification issued, then you need not require to take registration. So what are those categories? Some of the example. Let's say I'm a supplier and I got 2 crore rupees my outward supply, but my whole supply is subject to RCM. Recipient will pay GST under reverse charge. This particular class is being exempted for taking registration. So my outward subject to RCM, and this specified person is being excluded by way of notification. Lot of chartered accountant, right? We do intra-state and interstate supply of services. For interstate, compulsory registration under section 24, right? Even though my turnover is less than 20 lakh rupees, I'm asking a question, you answer me. I'm a chartered accountant, my turnover is only 12 lakh rupees. But I'm engaged in interstate supply of services, Delhi to Tamil Nadu. It is less than 20 lakh. But I'm engaged in interstate supply. As per provision, I must take GST registration under section 24. But 23 subsection 2 with retrospective amendment is giving power that they can always exclude specified class and any supplier of service, including chartered accountant, engage in intra and interstate supply of service, but having turnover, aggregate turnover not exceeding 20 lakh rupees, then he need not require to take registration. That is the specific notification made applicable from 13th of October 2017. Hope I'm clear to all of you. You say yes in a chat box that this part you're understanding what I'm conveying to all of you. You're understanding all these parts. Anyone who is engaged in handicraft goods, having turnover not exceeding 20 lakh rupees, exempted. That is what the meaning of 23 subsection 2. Hope this part is clear. Now coming to the next change. We have seen in GST era that GST registration is getting cancelled by proper officer, and so frequently they are cancelling. Section 29 subsection 2 is giving power in the hands of proper officer to initiate cancellation of GST registration, and they have specified number of situation like violation of provision under CGST Act and rules made thereunder for composition dealer and registered dealer, regular one. If they are not filing their return for continuously for specified time period, voluntary registration taken, but you're not commencing your business within 6 months, or registration obtained by means of fraud. These are the situations where proper officer may cancel your GST registration. So when GST registration is being cancelled, you're having another option under section 30 for moving revocation application under section 30. And time period was specified only 30 days, which is now amended by way of Rule 23, effective from 1st October 2023. Now this is going to be 90 days plus 180 days, which can be extended by commissioner or any officer authorized by him. So 90 plus 180 days as against 30 days. Hope I'm clear to this part. Please tell me Rule 23. Am I clear to all of you? Say yes in a chat box. All right, perfect, perfect. So you got it. Coming to the next change. Under section 37, we are filing GSTR1, outward supply, right? The change which was introduced in 2022 by Finance Act 2022 from 1st October 2022 was, unless you file your GSTR1 till a preceding tax period, you will not be able to file GSTR1 for the current tax period. We are in the month of October. Unless I file my GSTR1 till September, I will not be able to file GSTR1 for the current tax period October. And this change was brought from 1st October 2022. What is the change from this year? Effective from 1st October 2023. Belated GSTR1 can't be filed after a period of 3 years. So time limit is now being prescribed 3 years for filing belated GSTR1 from the due date of furnishing such return. This may be extended, but as per recommendation of GST Council on the basis of notification issued for a specified class of person. But this is the provision under section 37. Come to section 39. Unless you file GSTR1 for the current tax period October, you will not be able to file GSTR3B for the month of October. And this change was brought by Finance Act 2022, effective from 1st October 2022. Last year change. What is the change now? Time limit prescribed 3 years for filing belated GSTR3B from the due date of furnishing such GSTR3B return. So time period for belated GSTR3B, similar like GSTR1. First, you tell me, yes, you got it. Then I will tell you what is the problem. One operational issue is involved in this case. First, you say yes in a chat box that you got it. You understood it. Now, what is the problem which I foresee? Whenever GST registration cancelled by the department, and if we have gone for appeal or gone for revocation application, and let's say that is being accepted, and accepted that on furnishing of my pending return, GSTR1 or GSTR3B. But just think a situation that if my cancellation, my registration got cancelled, which is being now revoked, or appeal is being allowed on furnishing of GSTR1 or 3B, but if time period of 3 years is already expired, then what happened? How I would be able to file GSTR1 and 3B? That may be one practical and operational issue, which is not being clarified. But this is what issue pertaining to belated return filing of 1 and 3B. Hope you got it. Am I clear? Hope you got it. Am I clear? Hope you got it. Perfect. Section 44, 9 and 9C. Again, time limit prescribed 3 years for belated annual return, including self-certified reconciliation statement. Section 52, GSTR 8, which e-commerce operator need to file for tax collected at source. Again, time period prescribed for belated GSTR 8 filing, 3 years time period. So belated GSTR 1, 3B, annual return, and GSTR 8 time period is 3 years, unless otherwise permitted by way of notification. Hope this part is clear. Please tell me. Hope this part is clear. Say yes in a chat box that this part is clear. All right. Now, section 54 is a refund. Refund when we are filing refund under GST. You know, section 54, subsection 6. There's a provision that there would be 90% provisional refund. And there's one line added that this 90% provisional refund can be permitted with provisionally accepted ITC. Provisionally accepted ITC. But now there's no concept of provisionally accepted ITC. With the omission of all relevant provision pertaining to two-way communication from 1st October 2022. So they have deleted this term provisionally accepted ITC with self-assessed ITC under section 41, subsection 1 of CGST Act. Only this is the change under section 54, subsection 6. Come to section 56. 56 talks about interest for delayed refund. Let me ask one question to all of you. When you are filing refund application to get refund from the department on zero-rated supply, how many of you has got the refund within time period 60 days? Can you say yes in a chat box? How many of you has got refund within 60 days? Say yes and no. I can just analyze where we are. How many of you have got? So a lot of yes and no, yes and no. What we have seen in the trade, department used to issue deficiency memo, and we used to file a fresh refund application. So calculation of the 60 days is very important. If department does not give the refund within 60 days, then they have to give me interest beyond 60 days. So if there is delay beyond 60 days, they are supposed to give me interest. First of all, we are not getting principal refund. And second, interest to be calculated after 60 days. But now for calculation, under section 56, they have made the change. They are saying that this delay, they are going to calculate in the manner with such condition and restriction as may be notified. So they are saying, Bimal, calculation of this delay, we will provide the manner to you, and we can put such restriction and condition for calculation of this delay on which you are claiming interest on delayed refund. So you can understand whether this provision, I'm asking you, do you think this provision is really ease of business? Yes or no? Yes or no? It is not ease of business. It is completely against. Completely against. Nevertheless, okay, come to section 62, base judgment order. You know, base judgment order can be passed by proper officer when you fail to file GSTR 3B or GSTR 10, which is final return. You fail to file and base judgment order is being passed. Under section 62, there was provision this deemed withdrawal of base judgment order within 30 days, which is now extended to 60 days. Good one, laudable one. Further, it can be extended by 60 days on payment of additional fees over and above standard late fees. So to that extent, changes is being introduced in section 62. Good one. Come to the next change. Now, next change is, okay, so I'm going one by one and telling you there are certain provisions pertaining to formation of GST tribunal. You all are aware of that government is now made specific section 149 to section 154 of Finance Act 2023 applicable. They are also, bringing many changes, and they want to see the formation of GST Appellate Tribunal, which is the need of the hour. Recently, in 52nd GST Council meeting held on 7th of October 2023, there's important recommendation coming. That important recommendation is that they are going to align appointment of president and members of GST Tribunal with Tribunal Reforms Act 2021. And what they have recommended, listen very carefully. They have recommended that any advocate having indirect tax experience of minimum 10 years in any tribunal, high court, or Supreme Court can be appointed as a judicial member. But the minimum age should be 50 years for appointment of president or members of GST Tribunal. And maximum age to hold the tenure as a president would be 70 years, and for members it is 67 years. So GST Appellate Tribunal, our separate provision already got notified from 1st August 2023, which you can check in section 149 to section 154 of Finance Act 2023. Now, next change. Section 122, 1B. There will be penalty going to be levied on e-commerce operator. Now, e-commerce operator is being allowed that they can open their platform for supply of goods by unregistered person or composition dealer. So, a lot of compliances need to be undertaken by e-commerce operator. Like in composition dealer, we have seen that he is not allowed for interstate supply of goods or services. So e-commerce operator has to ensure that he is not permitting his platform for interstate supply of goods or services to any unregistered person. And this e-commerce operator is deducting TCS and correctly furnishing details in a GSTR 8. In case of failure to make the compliances, there would be penalty of 20,000 or the amount tax evaded, whichever is higher, going to be levied on e-commerce operator. Next change, an important one. Here I would like to draw your attention. Section 132. 132. Prosecution provision. Under section 132, there are 12 offenses specified for launching prosecution provision. Now, 3 offenses out of 12 offenses are decriminalized. So department cannot invoke prosecution provision against these 3 specified decriminalized offenses. What are those? 132 subsection 1 clause G, J, and K, which is like when you're preventing any GST officers for performing the duties, or you are tampering the evidence or details, or you are failed to supply information or providing false information, these three offenses are being decriminalized. So no prosecution provision. Good one. Second change, threshold amount for launching prosecution provision is being increased from 1 crore to 2 crore. 1 crore to 2 crore, it is a tax amount. 1 crore to 2 crore, except a specified offense under section 132 subsection 1 clause B, which is issuance of invoice without supply of goods or services or both, which is fake invoice. So for fake invoice, threshold would be 1 crore. Otherwise, threshold increased to 2 crore for launching prosecution provision. This is the two change under section 132. And you must be recalling that there are specified non-bailable offenses if threshold amount of tax is more than 5 crore. What are those 4 specified offenses? Supply of goods or services without invoice, issuance of invoice without supply of goods or services, you're availing credit on such fake invoices, or GST collected but you fails to pay within a period of 3 months. So amount of tax evaded is more than 5 crore, then it's a non-bailable offense. Less than 5 crore, 2 to 5 crore is a bailable offense. And there was another category, 1 to 2 crore. Now, to that extent, they would be changed because threshold now being increased from 1 crore to 2 crore, except fake invoices. Hope this part is clear. Can I see yes in a chat box that this part is clear? Say yes in a chat box that this part is clear. Coming to the next change, compounding of offenses, section 138. Compounding of offenses is permitted in GST law. Now, compounding need not required for the offenses decriminalized. 132 subsection 1 clause G, J, K decriminalized. No compounding required. For fake invoice, no compounding. You can't go for compounding for fake invoice. 132 subsection 1 clause B. Otherwise, now compounding threshold is being liberalized. Earlier, it was 50% to 150% of tax amount, which is now going to be 25% to 100%. And Rule 162 also got notified for calculation of compounding amount effective from 1st October 2023. Am I clear to all? Say yes that you got it. This compounding of offenses. Say yes in a chat box that this part is clear. Perfect. All right. Thank you very much. Now coming back to another important provision. Section 158A. Very recently we were we heard that GSTN portal can share the data under PMLA, Prevention of Money Laundering Act. You must be knowing that for ED offenses. And we were having fear around whether GSTN portal can really share the data with other system notified by the Government of India. Yes, it is being permitted. Section 158A, which is consent based. They will take your consent, and whatever particulars you have filed at the time of registration, e-invoice generated, eBay bill generated, GSTR1 is being filed, 3B is being filed, annual return is being filed, such data can be shared with other system as notified by the government. and it is consent based. And that is what the new section which has got notified from 1st October 2023. And you can't demand any kind of penalty, any kind of, damages on that account. Having said, I've done all the important provision pertaining to CGST Act. Now I'm talking about change in IGST Act, important changes in IGST Act. Let me take up those changes now. Okay. Under IGST Act, let's start very first. Section 12, subsection 8 of IGST Act. Read with section 13, subsection 9 of IGST Act. And what is this? Listen very carefully. We all know from 1st October 2022, sunset clause for the exemption on ocean freight is being done away from 1st October 2022. You must be recalling that, right? So GST levied 5% on ocean freight. Under section 12, subsection 8, where supplier and recipient of service located in India, place of supply was destination of goods as per the proviso. Destination of goods. To understand in a better way, let's take an example. Let's say I'm a freight forwarder in Delhi, and you are my company recipient in Delhi. I'm undertaking transportation of goods destination to Germany. So as per section 12, subsection 8, because we both are located in India, place of supply is the destination of goods, Germany. So when I'm going to raise the invoice to you, to my company registered in Delhi, same state, what I'm going to charge? I'm going to charge IGST. But you are registered in Delhi. If I'm charging IGST and mentioning other territory, there was dispute of availing credit. You must be recalling that this dispute was there initially in the beginning. We got circular clarifying position, no, you will get the credit. But now what they have done, they have omitted the proviso pertaining to destination of goods. They have omitted. Now the provision is supply of services of transportation of goods, including mail or courier. Place of supply for B2B supply, registered supplier to registered recipient. Place of supply would be location of recipient. So in this case, even though goods are destined Germany, but I will charge CGST and SGST, and you can avail credit if it is related to taxable supplies. So that dispute of, IGST charge, how to avail credit is being done away. And in case of B2C, place of supply would be the place where goods are handed over for further transportation. That is how the change brought in 12 subsection 8 of IGST Act. Please tell me, have you got it? Say yes in a chat box that it is clear to all. Say yes in a chat box that this part is clear to all. Perfect. Section 13, subsection 9. Section 13, subsection 9 of IGST Act. Where supplier of service or recipient is located outside India. What is section 13, subsection 9 is saying? Transportation of goods, excluding mail or courier. Place of supply would be destination of goods. They have omitted this section 13, subsection 9, effective from 1st October 2023. So what will happen now? So we can take an example, and so that we can understand this transaction. Let's say I'm a freight forwarder in Delhi. I'm undertaking transportation of goods to Germany for my client located in Germany. Client located in Germany. Am I right? Or you can say if client is located in India, you can always say that. So reference is coming out supplier or recipient located outside India, one party. So now it is very simple. You have to go to the default rule. Default rule is section 13, subsection 2. So place of supply would be location of recipient, location of recipient. So if I'm undertaking supply of goods to Germany for recipient outside India, then place of supply is outside India. If address for my recipient is not available in the books of supplier, then the location of supplier, which is the default section, section 13, subsection 2, need to be followed from 1st October 2023. Please tell me, am I clear? Am I clear? Say yes in a chat box that this part is again clear to all of you. So a lot of yes coming, and I will undertake your question. Believe me, if you're having some question, we will do open house also. But after the end of my presentation. So you have to continue with me. Once I'm through, I will take your questions. So just pause, keep your question parked. I will take up those questions. Now, there was one specific section, section 123 of Finance Act 2021. 2021 got notified from 1st October 2023. Wake up call. Listen, I need your attention now. I need attention for 5-10 minutes so that you can understand this provision well, clearly. See, there are two zero-rated supply, two transactions. One is export of goods or services and supply of goods or services to SEZ unit or developer, as per section 16, subsection 1 of IGST Act, which we all are aware of. What is the change? As per this section 123 of Finance Act 2021 got notified from 1st October 2023. Whenever you're supplying goods or services to SEZ unit or developer, it must be for authorized operation. Please, authorized operation. For understanding authorized operation, whenever you are supplying goods to SEZ unit or developer under LUT model, LUT or bond, Rule 89 is already having a reference of endorsement on documentation by jurisdictional officer of SEZ unit or developer. That is called that he's endorsing the document that these goods are being received for authorized operation. Rule 89 is having the reference. But now this got notified. And it's got notified only from 1st October 2023. Point number 1. Prior to 1st October 2023, rule was there, but there was no corresponding provision. Now provision is being notified, so providing power to the rule made. But for the past period, we can always litigate and defend. There was no provision for authorized operation. Please tell me this part is clear. Please tell me this part is clear to all of you. This part is clear to all of you. Perfect, perfect, perfect. Thank you very much. Thank you very much. Next important one. Next important. What is authorized operation? Baron, simple, that SEZ unit is procuring such goods or services for their authorized operation. Means they are being authorized for certain operation, Barun. And how it is going to be, because that designated SEZ officer will endorse the document that whatever you're procuring goods, that is for authorized operation. Now the challenge is for services. Services. I'm asking one question to all of you. Do we have any list of services? Mean that we can say it is for authorized operation? Say yes and no in a chat box. Do we have any list? Say yes and no. I want to see that in a chat box. And today I'm going to give you one thing, very important one. There is one list which is called Uniform List of Services. Notification number you can note down. D12/19 dated 2nd January 2018. 2nd January 2018. Under SEZ Act, there's a list provided, uniform lists of service provided containing 66 services, which is being considered for authorized operation. If your services are even over and above 66 services, then you must ensure that these services are being endorsed by designated SEZ officer for authorized operation of SEZ unit or developer, so that tomorrow it is not being disputed. And from 1st October 2023, you should be careful about. So Mr. Ganeshan, it is notification number D12/19 dated 2nd January 2018. Hope I'm clear to all. Clear to all. Say yes at least in a chat box. Say yes in a chat box. This part is clear. Okay. Now the important one. Now the important one. Listen very carefully. Whenever we are undertaking zero rated supply, there are two modes available, right? One is refund of ITC on input and input services under LUT or bond, option 1, or charging IGST on my zero rated supply and claiming refund of IGST. These two options. There is a change in section 16, subsection 3 and subsection 4 of IGST Act, but effective from 1st October 2023. And listen carefully, what is the change? When you're exporting goods on payment of IGST, you're aware of. Rule 96 was already notified from 23rd March 2020, wherein there was condition that you within a time period specified under FEMA, which is 9 months. So if you have exported on payment of IGST, as per Rule 96B, effective from 23rd March 2020, you must receive the exports proceeds within the time period 9 months under FEMA. If not done, if you have taken refund, this need to be deposited back within 30 days from the expiry of this time period specified, along with interest, Rule 96B. But my humble submission is, this rule was beyond the power from the Parent Act. Section 16, subsection 3 is now permitting. Now it is permitting. Now it is saying that from 1st October 2023, this rule is getting backing now. So I can always say from 1st October 2023, you need to follow Rule 96B. But prior to that, we can litigate the matter. Please say yes in a chat box that this part is again clear to all of you. Say yes in a chat box that this part is clear. All right. Many of you are saying yes. I'm not finding single no in chat box, meaning thereby that you all are understanding, and my chat box is open to everyone. So you must cherish that whatever we are discussing today, we are understanding. And that is really Sabka Saath, Sabka Vikas. Next change, section 16, subsection 4. Section 16, subsection 4 is saying now government can notify any class of person or class of goods or services which cannot be exported on IGST. Which cannot be exported on IGST. And thereby, notification number 1/2023 integrated tax dated 31st July 2023 got notified that certain goods which cannot be exported on payment of IGST, meaning thereby such goods should be exported only under LUT model. And these goods are being specified in notification number 1/2023 integrated tax. What are those goods? Pan masala, tobacco, cigarette, and gutka, majorly. You can check this 1/2023 with the corresponding HSN given for the goods cannot be exported on payment of IGST. It has to be under LUT model only. Hope this part is clear. So Barun is asking why this change. I will tell you a little later, but am I clear to all of you? Am I clear to all of you? Say yes in a chat box so that we get a clarity. Why this change is being brought for the information? Because in IGST model, we are getting refund of input services, and capital goods, all three items. And you would be preferring IGST model, right? Because that is very convenient model. On the basis of shipping bill, you get the refund when you're disclosing the transaction in GSTR1. But government has seen many cases of fake input tax credit availed and utilized for payment of IGST. So they are identifying that risk-prone product class of goods where they are finding that these should not be open with simple shipping bill criteria, IGST criteria. It should be under LUT model to create detention, meaning thereby some corrective measures, control and check measure. That is how notification number 1/2023 talking about tobacco, pan masala, and gutka. Hope I'm clear. I explained to this particular question raised by Barun, but I've explained to all of you. Am I clear to all of you? Can I see yes? All right. Very recently, in 52nd GST Council meeting, GST Council has recommended that even supply of goods or services to SEZ unit or developer will be permitted on IGST. No problem. You supply goods and services to SEZ unit or developer on IGST, no problem, and claim refund. But subject to that notification number 1/2023 integrated tax. So no export or no supply of rather tobacco, pan masala, cigarette, etc. So this is the recommendation. Hope this amendment will be done accordingly. So this is pertaining to export related. I'm through with the IGST except last change. Definition of non-taxable online recipient, which includes unregistered person, and OIDAR, Online Information Database Access Retrieval Service, is widening the tax base now. So if any OIDAR services provided from non-taxable territory, foreign service provider, to unregistered person, non-taxable online recipient, IGST liable, and such foreign service provider need to take registration in India and pay the GST and make the compliances. So definition of non-taxable online recipient with OIDAR is being amended accordingly. Last component of today's discussion, and then I will ask my friend from Joho Books to give you 5 to 7 minute quick snapshot of Joho Books, how it is easier helping you guys to make GST compliances, and that too with automation, automated through electronic route. Last component, let me explain and then we will proceed. You must be knowing that 50th and 51st GST Council recommendation for GST levy on online gaming, horse race and casino at the rate of 28%. Now with the Finance Act, Amendment Act rather 2023, CGST Act 2017 got amended for introduction of GST to be levied on online gaming, horse race and casino. What are the important changes is being done? I'm just highlighting within 2-3 minutes so that you can digest those pointers. First change they have made in Schedule 3, Para 6, actionable claim other than specified actionable claim. So actionable claim per se, neither a supply of goods nor supply of services, Schedule 3 transaction, except specified actionable claim. So what is specified actionable claim? 6 transaction: gambling, betting, lottery, which was there. Now they have included horse race, casino, and online money gaming. Online money gaming. So hope this part is again clear to all of you. They have included. Now they are saying they are going to levy GST on this 6 specified actionable claim. Good evening, Mr. Ramesh. You can unmute yourself, Mr. Ramesh.
Good evening, Bimal Ji. Yes, sure.
Yeah, just give me a few minutes. I'm supposed to finish my presentation and then I will invite you for your presentation. And
Definitely.
then we will start with the open house question answer.
Sure.
Okay. Now, listen very carefully. It is very important. So what is the definition of online gaming? So they have given the definition under section 2 subsection 80A of CGST Act. Online gaming means some gaming which is provided through internet or through internet network, and that includes online money gaming. So online gaming includes online money gaming. And what is online money gaming? Online money gaming means online gaming where the player pays or deposit money or money's worth, including virtual digital asset. So all crypto, Bitcoin are being included in the definition, online money gaming. And definition of virtual digital asset as given under section 2 subsection 47A of IT Act 1961, Income Tax Act 1961 is being adopted. So they are saying now online money gaming is now going to be leviable to GST, which also include virtual digital asset. They have given valuation, specific valuation provision. Rule 31B for online gaming, including online money gaming. And what they have said, that any amount paid or payable or deposited in money or money's worth, including virtual digital asset by players to the supplier of that platform, on that value that GST is going to be levied, and there will not be any deduction on account of any money returned or refunded. So whatever you pay, deposit, money or money's worth, including virtual digital asset. Even for casino, they have said any amount paid or deposited to buy token chips, whatever, when you go to a casino, on that amount itself, GST going to be levied, and no deduction for any amount return or refund, nothing. 28% GST going to be levied, and changes are being brought in notification number 1/2017 goods rate notification. So whatever we are discussing, this online gaming, irrespective of game of chance or skill, it is effective from 1st October 2023. 28% GST leviable to done away with game of chance versus skill. So what happened? Fate of Karnataka High Court judgment, Gamescraft, 21,000 crore rupees, which was set aside Honorable Karnataka High Court because they have said game of skill cannot be adjudged, cannot be, discussed at par with the betting, gambling, or lottery. But now, henceforth, from 1st October 2023, irrespective of fact, game of chance, or skill, online gaming, including online money gaming, with definition virtual digital asset, 28% GST. So any foreign service provider from non-taxable territory need to take registration in GST and charge GST whenever it is being provided to non-taxable online recipient, unregistered person. And this is what government intention all about. So there's a brief, provision pertaining to online gaming, horse race, and casino.